Oil prices are surging, and it's not just about your gas tank. Brent crude is stubbornly holding above levels that are making central bankers very nervous. This isn't just a blip. It's a significant geopolitical challenge that could rewrite the script for interest rate cuts we've all been hoping for. We're going to break down what I call the Warsh-Hormuz loop, why it matters, how it works, and what you need to watch. This loop connects the volatile geopolitics of the Middle East directly to your wallet and the global economy. Understanding it is key to navigating the markets right now. At the heart of this dynamic is the Strait of Hormuz. Imagine a narrow maritime bottleneck, barely 21 miles wide at its tightest point. This isn't just any waterway. It's the world's most critical choke point for oil shipments. Roughly a fifth of the world's total petroleum consumption and a third of all seaborne crude passes through here daily. When geopolitical tensions flare in the Middle East, think about the ongoing friction and retaliations we're seeing. The risk to this vital passage skyrockets. Any perceived threat or actual disruption sends shivers through global supply chains and immediately pushes oil prices higher. That's the first crucial part of the loop. When oil prices spike, it doesn't just impact your fuel bill. It's a direct input cost for almost everything. Transportation, manufacturing, agriculture, it all gets more expensive. This broad increase in costs fuels inflation, making it harder for central banks to hit their target levels. For months, markets have been anticipating interest rate cuts, expecting inflation to cool down naturally. But a persistent energy shock like this one throws a wrench into those plans. Central banks, like the Fed, might be forced to keep interest rates higher for longer to tame this new inflationary pressure. That's the Warsh part of the loop, the policy response to the energy shock. So, how exactly do these oil price movements ripple through the economy? First, there's the immediate hit to consumer spending power. Higher gas prices mean less discretionary income. Then there's the pass-through to businesses. Factories pay more for energy, shipping companies pay more for fuel, and those costs eventually get passed on to consumers in the form of higher prices for goods and services. This can create a sticky situation where inflation becomes embedded, even if the initial oil spike moderates. Markets are currently betting this oil surge is temporary, but the longer it persists, the greater the risk that it filters into broader core inflation, making it much harder to undo. This isn't the first time the Middle East has played such a pivotal role in global energy markets. We've seen this movie before, with different actors, but similar plot lines. From the oil shocks of the 1970s to the Gulf Wars, geopolitical events in this region have repeatedly demonstrated their power to disrupt global supply and send economies reeling. The sheer concentration of proven oil reserves and production capacity in the Middle East means any instability there has outsized consequences. Understanding this historical context helps us appreciate why the current tensions around Hormuz are being taken so seriously by policymakers and investors alike. It's a perennial risk that demands constant vigilance. So, what should you be watching from here? First, keep an eye on the price of Brent crude. Is it just consolidating above current levels, or is it pushing even higher? Persistence above the $90 mark is a key signal. Second, monitor geopolitical developments in the Middle East. Any de-escalation or further escalation will directly impact perceived supply risks. Third, watch for upcoming inflation data. Specifically, look for signs that energy price volatility is starting to seep into core inflation measures, beyond just headline numbers. Finally, listen to what central bankers are saying. Any shift in their rhetoric about the path of interest rates will be crucial. These are the levers that will shape the path forward. The Warsh-Hormuz loop is a powerful reminder of how interconnected our world truly is, from geopolitics to your grocery bill. Its dynamics will continue to influence global markets and central bank decisions for the foreseeable future. Staying informed about these complex interactions is more important than ever. For a full written breakdown of this analysis and to dive deeper into the data and implications, head over to korra.finance. We'll keep you updated there.